Have you ever watched the news and heard the market is up by 500 points and thought, what does that even mean? Or maybe your friend said they made money from stocks and you were like, how? Don't worry, you're not alone. Today we are breaking down the Indian stock market in a way that is super simple. No financial jargons, no complicated charts, just clear, easy to understand information that will get you up to speed. No financial degree involved. Okay, imagine a big bustling marketplace, but instead of fruits or clothes, people are buying and selling tiny pieces of companies. Those pieces are called stocks or shares. When you buy a stock, you are literally becoming a small part owner of that company. If the company grows, your share becomes more valuable. Sometimes the company might even share a portion of its profit with you. That is called dividend. Cool, right? Now, you might have been thinking, why would a company sell part of itself? Well, let's say a company wants to expand, maybe more offices, launch new products, whatever. It needs money, right? So it sells shares to the public through something called an IPO or initial public offering. Basically, it's inviting the public, you and me, to become co-owners. And after the IPO, the shares are traded on the stock market, where anybody, including you and me, can buy and sell them. In India, we have two main stock exchanges. One is Bombay Stock Exchange or BSE. It is actually one of the oldest in Asia. And the other stock exchange is National Stock Exchange, also known as NSE, which is more modern and handles more trading. Think of these exchanges like giant, super organized digital marketplaces. And to make sure everything stays fair, we've got SEBI, the Security and Exchanges Board of India, which keeps an eye on everything that goes on in the market. They regulate and protect investors like us. So how do stock prices move? It all comes down to demand and supply. If lots of people want to buy a stock, the price goes up. If more people want to sell, the price drops. Company performance, big news stories, and even global events can influence the prices. It's just like how the price of mangoes goes up in summer because everyone wants them. Here's the best part. Anybody can invest in a stock market. If you have a PAN card, a bank account and internet access, you are in. All you need is a demat account which stores your shares digitally and a trading account to buy and sell through a broker. Most brokers offer both in one place and setting it up is pretty simple. Actually, it's just a few documents and a selfie. First, there are long-term investors who buy and hold shares for years, letting their investment grow over time. Then there are the traders who buy and sell quickly, often intraday, aiming to make small profits from price movements. Both approaches exist, but if you're just getting started, long-term investing tends to be less stressful and more rewarding. Now let's talk about some of the key terms that you must know to be familiar with the stock market. First, Sensex and Nifty. These are indices that track how the biggest of Indian companies are performing. If they are up, it usually means the market is doing well. Second, IPO. When a company sells shares to the public for the very first time. Third, dividend. A piece of a company's profit that is shared with the shareholders. Fourth, market cap. The total value of a company's shares. It helps categorize companies into large cap, mid cap, and small cap. 5. Bull market. When stock prices are rising and investors are confident. 6. Bear market. When prices are falling and people are more cautious to invest. So why should you even care about stocks? Because they can help your money grow faster than it would sitting in a savings account. Over time, a good investment strategy can help you beat inflation and build real wealth. But here is the catch. It's not without risk. Stock prices go up, but they can also go down. That's why it's important to do your research, invest for the long term, and never invest money you can't afford to lose. Starting out in the market is far easier than you would even think. Here is how to begin. First, decide your goal. Are you saving for a house, retirement, maybe a vacation? Second, open a demat and trading account with a reliable broker. Do take a look at the fees they charge you. Third, start small. Maybe invest a little amount each month while you learn. Fourth, and most importantly, diversify. Don't put all your money in one stock, ever. That's the Indian stock market explained in simple terms. If this helped you clear things up, give this video a thumbs up and hit the subscribe button for more such content. See you in the next video, and hey, happy investing!